Bitcoin sitting right on the one line that decides its next big move, and almost nobody's watching it. Today, that line gets tested. I'm Chris. Welcome back to Bitcoin Whale. Let me show you what I see. Quick recap. Yesterday, Bitcoin was at 64,894. Today, it's at 63,937, basically unchanged. No trigger fired. Yesterday's setup carries straight into today. On the 4-hour, we've been working what looks like a symmetrical triangle for the last few days. Let me draw it out for you, line by line, so you're not just taking my word for it. Most of the people on Twitter right now, they're guessing. They want it to go up because they're long, or down because they're short. We're not doing that. We're reading the chart instead. First line, I'm drawing the ceiling. Descending resistance. Anchor up at the cycle peak, that's around 82,048, and drag down to the most recent lower high. Watch where this lands. A line only matters if price has actually respected it. So watch. Price has tested this line more than 5 times and got rejected every single time. That's about as validated as a line gets. Let me mark the clearest rejections right here on the chart, so you can see it for yourself. Projected to right now, that line sits around 64,636. Write that down. That's the number bulls need to take out. Not a wick. A clean 4-hour close above 64,636. That's the trigger. Real quick, if these levels are useful to you, do me a favor and hit subscribe. I break down Bitcoin like this every single day. Now, let me drop down to the 1-hour, because the 4-hour gives us the structure, but the 1-hour is where the entry actually lives. On the 1-hour, the recent range runs from about 60,755 up to 67,292. That's roughly 10%. Tight. And right now we're sitting near the lower edge of it. The fast-moving averages, 20 at 65,016, 50 at 64,787. Price is below both. Yeah, that's just bearish, no way around it. On the 1-hour, that tells you the immediate momentum. Okay. So that's the near-term picture. Let me jump back up to the 4-hour and finish the structure. Back on the 4-hour. Second line, the floor. I anchor on the swing low at 59,130 and drag up to the most recent higher low. This floor is held more than 5 times. Every dip got bought right here. It projects to about 63,539. That's the line in the sand. While we hold above it, the bullish structure is intact. 2 trend lines only get you so far on their own. The real edge shows up when you stack other tools on top. So watch. I'm layering a Fibonacci retracement over the same swing right now. So around $63,539 a cluster of my levels bunches together. That's a confluence zone, not one clean line. When several different methods all point at the same area, that's not a coincidence. That's where everyone's looking. Funds, retail, algos, we all see the same zone. I'll drop a horizontal on it so you can see exactly where it sits. So what's the bigger picture target? The pattern's about $15,984 tall from top to bottom. And when these break, price tends to travel that full distance. That's the structural target, the swing move. In a second, I'll give you a tighter intraday entry inside that. But this is the direction, the measured move points. And we've got the historical data on our side here. I've seen this pattern play out, 50, 60 times? And the data on these is actually pretty interesting. Whichever way it breaks, it usually goes the full distance, like 70% of the time it completes the measured move. So the direction's basically a coin flip, but if you wait for the trigger, the size of the move is real money. So how do we trade it? 3 scenarios. Scenario 1, bulls take the line out. A 4-hour close above 64,636. If that happens, my target's 80,620. That's where I'd be taking profit. Scenario 2, bears win. A 4-hour close below 63,539. Same math the other direction. Target's 47,554. Stop right above the broken level. Keep it small. And then scenario 3, which honestly is probably the most likely one. Neither close prints. We just keep chopping inside the range. And if that happens, you do nothing. Sit on your hands. When the market's compressing like this, being patient is way more profitable than being right. So that's the full framework. One path up, one path down, and a whole lot of chop in between. 3 clean levels, and the chart picks the winner, not me. Whichever way it goes, you're reacting to a trigger instead of guessing. All right, here's my actual plan. This is a long setup. Let me drop down to the 1 hour and draw the exact entry, stop, and target. I'm not buying this candle up here. I want to dip into the recent swing low, down around 63,696 to get long. Stop loss at 63,425, just below it. That's where I'm wrong, no questions asked. Target sits at 65,607. That gives you a risk-reward of about 7.1 to 1. I don't force it. If the reward isn't clearly bigger than the risk, I just pass. The math has to be in my favor before I even think about it. And it only triggers on a confirmed close, not a wick poking through. Risk 1% of your account, not your whole stack. And if this helped you read the chart today, smash that like button. It genuinely helps the channel, and it tells me to keep making these. That's how I'm trading Bitcoin today. Stay sharp out there, and I'll see you on the next one.